I have pleasures of meeting today for hotels and resorts, Jeff Kozla.
Thank you for having me.
Yeah, Jeff has been GF Hotels and Resort, used to be called GF Management, for over 31 years. The company's been there for 33 years, and I've known Jeff for almost over 15 years, and always have high respect in getting valuable information in the hospitality industry. In fact, one of the forum you were one of the speakers, if you remember.
One of your first forums.
I remember.
Yes.
Yes. Biggest news today was Russia attacking, Ukraine.
Yes.
Will that affect our industry?
I think two phases I look at it. One, we've actually had calls this morning internally about hotels located in any type of military markets,
Okay.
which may positively affect some of the transactions that occur there in terms of future demand. The flip side of that is I think we've already been seeing the effects of inflation across the board in terms of the commodities markets, gas, product, anything you need to get, and we think that's only going to continue. And then I believe the news that's come out recently, we know there's going to be an increase in interest rates. So anytime there's an increase in interest rates, it usually affects cap rates, etc. From the financing perspective.
What is the health of our industry with this Omicron? What do you think?
I think I hate to say it, herd immunity, but you go back and you look at the when Omicron really peaked at the beginning of December, going into the end of 21. It certainly affected a number of markets, and it still can affect some of the markets depending on where you're at. Yeah. If you look at your top 25 MSAs, you still have areas such as San Francisco still struggling, Chicago still struggling. Those markets that are affected solely by international or convention type of business. The downtown CBDs, most of them are still struggling. The flip side of that is any hotels that are in markets such as leisure. We're sitting here in Miami today, and you wouldn't think that Omicron existed or there is no COVID.
Unbelievable.
I'm from Philadelphia, and we still have children's sporting events that we can't attend in person. Believe it or not, you come down here and you don't see anything affect down here. So it's just market by market. So I think we're on the downside of Omicron, and hopefully we won't have another variant that will come out. But I think even if another variant does come out, it should not affect the industry, because I think the vaccination rate of most people.
Well, because that's what I was going to say. That helps, And going forward, this economy is changing so fast, that the hotel industry, RevPAR, the occupancy on 25 markets plus some of the leisure market has picked up so much. The demand has increased. Is this going to continue?
We should have another strong year in terms of the leisure market where I'm not going to say you can charge a higher ADR, but we're seeing record ADRs in a number of the leisure markets out there, whether it's anywhere in Florida, down in the Florida Keys, significantly over 2021, which had some really strong numbers in the leisure markets, as we all saw. The real question is tied to the stock market. If you look at what's happened over the last 3-4 weeks, the dip in that, people start looking at their statements. If people look at them on a regular basis, is that going to affect their spending demand or their mindset in terms of going on vacation, etc. When you talked about the activity over in Europe with the invasion, is that going to cause people not to want to travel internationally again? Because quite honestly, I believe that the fact that the borders were shut, people didn't want to travel internationally. That also helped the leisure demand in most of the drive-to markets in the United States in 2021 and even into this year right now.
In your company, how do you see with property that you are managing and property that you own, what kind of outlook that you're looking at?
In Florida, Orlando, which we have a very large presence, I know your team has sold quite a bit of properties up there. We're actually anticipating one of the best back half of this year is based off of the convention calendar, the amount of leisure demand, and the booking pace that we're seeing in all of our property types up there, whether it's full service, select service, extended stay. We're seeing significant demand right now.
Now, I'm talking to a lot of owners, on limited service, and select service. The biggest problem right now they're telling is the level,
Right.
And it's like they just cannot find the labor. This is it's a unique change in our industry. In your expert opinion of last all these years, this is the first time are you observing that kind of change, isn't it?
It certainly has been a struggle for our industry, a combination thereof. If you think about all the government aid that was given to people, and they really didn't have to go to work or could sit at home and collect money, that was challenging.
Mm-hmm.
In our industry as well, you've got to realize that the hotel industry also had a lot of international people that would come in
Mm-hmm.
and work in the United States, whether it be on a green card or a working visa, et cetera. And some of those people have not been in the states to do all that, so you're missing that workforce. The other item certainly is if you look at the wages that you're competing with an Amazon or another type of facility like that. The wages for general housekeeping or the average wage of a front desk clerk, et cetera. I mean, you're looking in Florida, it's probably $15, $16 an hour.
Oh, it's coming, yeah. That's right.
I'll bet you if you went back and looked at that, your statistics from back in 19, you were probably 11 or 12 or 10.
Unbelievable, yeah.
So it's changed significantly. And we're fortunate enough that what happened with Omicron, I think all the operators, we've learned to operate a little bit more efficiently.
Mm-hmm.
Hopefully we haven't gotten too passive in that approach and have gotten used to not having a full breakfast, taking shortcuts here and there.
Shortcuts.
Stop cleaning certain areas. You just hope we don't get back to that approach where you take those shortcuts. So you have the customer expectation that they pay more is going to increase. And quite honestly, the brands had also given some leeway in terms of how you operated.
I saw that.
And now they're out doing inspections of the properties, and the customers are telling you what they want, what they want to see. Full service hotels, Hilton, Marriott are now requiring you to have your restaurants open now, whereas before you didn't.
Before then, yeah.
And you basically had a large hotel that was operating as a select service hotel, which your margins were incredibly high.
In this industry, the management that you have so much experience managing a lot of properties that you've been doing it, what do you advise to the hotel owners, who are running limited service mom and pop? What they should do in this kind of market to manage their property?
I mean, we've always focused on relationship with your staff.
Okay.
When you run into a mom and pop operator on a limited service, usually they're family run. Their family helps out. They're jumping in everywhere. I can tell you that some of our smaller hotels that we manage, our general managers, you see many times where they're cleaning rooms, working constantly. They just have to stick with it. Make sure you take care of your employees. Do the extra things. We do more employee appreciation events than we ever did before. You just got to take care of them. So it's a very good work environment. So they have to enjoy to want to come to work because you want them to do that. And we focus on the mental health side of it because the last thing you want to have is people sitting at home 24/7, and you want to get them out. So we make sure it's a nice environment for them. One of the other things that we focus on is the flexibility of the work environment.
Okay.
Whereas if somebody, instead of having an 8-hour shift, that they can only come in for 4 hours, you'll take their 4 hours and be happy with it, instead of requiring them to do 8. So they may do 6 4-hour shifts instead of 3 8-hour shifts. You'll take whatever you can get, and then they'd be working around their daycare or taking care of their children, but you still get them to come to work on a regular basis.
A lot of clients are coming to us and saying, why it's so expensive? If the hotel's valuations is there, what is your feedback? How is this going to change this year?
It's all about the demand. No different for a hotel operation in terms of occupancy and ADR. If you think about revenue management in a specific hotel property, you're handling it the same way on a valuation property. If there's increased demand of buyer pools that are out there, and you have a willing seller that's willing to sell and not get too greedy, we see that the demand will continue to drive values up. The other selling point is the price of construction for new hotel product and new construction, between labor increases and product increases. Sometimes you have to look at the demand on that. It doesn't make sense to build a new hotel if it's going to cost you $200 a key to build a new hotel, and you can buy one for $150 a key on a going concern operation. And you have to spend $25. It may be their best bet to get into a market.
In the better market.
Yes.
Do you see any distressed properties opportunity this year?
Yeah, our portfolio, one of our business models is we've done receivership and REO management. The 30 years I've been with the company, we've handled over 700 assets in that classification. Everybody thought there was going to be a huge wave when
Right.
COVID hit. Between the CARES Act and the Troubled Debt Restructuring Act that took place, there was certain forgiveness that were given, and there was quite a bit of forbearance given with other lenders. We're seeing more and more product come to the market. What's out there? There hasn't been this huge wave, but we have handled more receivership sales. We're involved with hotels we're managing that are REO in the last 2 months of 21 and the first part of this year. We'll see those continue probably through Q2. We don't see the volume of new activity coming in, new assignments in terms of REO or receiverships in the volume that we had in early 2020 and even in 2021.
Lending is coming like very, very favorable. I saw the lending is so favorable lately.
It'll be market by market again.
Okay.
Just like any good banks or financial institutions, if there's money, they have to put it out there. They're going to lend it, and if they feel very comfortable, it becomes a competitive environment. As you all know, when you were looking at the end of 2020, I don't think any lenders were looking at any deals. It was very difficult to do.
Very difficult.
Correct. But just like anything, as the markets continue to increase, it becomes more and more competitive. There's more money allocated. The lenders feel comfortable with their book, their position, and their allocation of hospitality assets within their loan portfolio.
In conclusion, I wanted to ask you, if you have to advise the hospitality industry for 22 outlook, what are the 3 things they should look out?
Take care of your employees or your associates. You can't operate a hotel in 22, so you want to make sure that they're well taken care of, where you're not going to be able to survive. The second item is you've got to make sure the property's taken care of.
Taken care. Okay.
If you think about in the last 2 years, between the leniency that the franchise have given, or the franchisors have given the owners and the operators, there wasn't a lot of extra money to put into the property, so some deferred capital projects were put aside, etc. And then the third item is again, be resilient. We've been through. I've been through many cycles, and I think we all saw the writing on the wall at the end of 2019. We were on a 10-year uptick in terms of RevPAR improvements. Everybody was expecting a decline. I think we talked about it at your event maybe that year.
Yeah.
You saw the dip, and actually, if you look at the last 30 years of the industry, it's ups and downs. So I think we're going to continue to rise, and the hotel industry is a great industry.
It's great industry. Always pleasure to talk to you. Besides friend, you are a resource for many people, and what I've noticed. So we have a lot of respect for you. We'll continue to keep this dialogue, and hopefully meeting soon at the lodging conference or Hunters.
Absolutely.
Look forward.
And thank you for having me today.
And this is a good insight of our industry. We look forward to get your comments, and look forward to hear again next month. Another video series coming up. This is Amit Kabani from Kabani Hotel Group.